Hi guys, and how are we doing? You're welcome to Trade with Bolu online services basic course. My name is Trader Miju, and I'll be taking you today on PIPS, take profit, risk management, and stop loss. Today we are just going to be looking at these major concepts that we see from time to time in the forex market, because the proper understanding of what these are would actually advance your trading. So looking into our risk warning, we say that trading forex and other products carries some degree of risk, and you actually want to be careful when trading, always by applying proper risk management, and never trade with money you cannot afford to lose. Okay, so diving in, we have our quote which says that you cannot produce a baby in 1 month by getting 9 women pregnant, and this quote is attributed to Warren Buffett. Yes, and in this quote is just talking about the importance of trusting the process, and there's no shortcut actually in forex. There's no shortcut of any sort, of any kind, in forex. Trust the process and you would see the result. Just like it will take a baby 9 months to come out, same thing as forex, it takes time to see profitability, but trusting the process, you see the results even at the end. We have three basic types of charts in the forex market, and we have number one, the bar chart; two are candlesticks or the Japanese candlesticks; then three are line charts. And you could decide to use any of these charts when trading, but the most popular we do use here and is being used all over the world is the Japanese candlesticks. And this is because the Japanese candlesticks has the ability to form patterns unlike on other charts. For example, line charts, you can't really see candles patterns by the, or a bar chart, same thing, but candlesticks you could see different patterns and know how to identify, because they show emotions of what is happening in the forex market. So we are going to be using the Japanese candlestick. In case you've not set it, just set your chart to candlesticks, and let's move on. So some forex misconceptions we want to just erase. Forex is not gambling. True. People would always think forex is gambling and all that, but actually we would always say that forex is not gambling, because you are actually carrying out proper analysis, and once you analyze, you're able to determine where you feel the market will go, even though it may not be 100% predictable. But when you apply proper risk management, yes, you would actually win most of the times in the forex market. For example, I decide to buy a currency after analyzing, but it does not go my way. Because of proper risk management, I would not lose much of my capital in the forex market. So because of proper risk management and proper analysis, these are the two key factors that give traders edge in the forex market. So we are talking about risk management, and risk management is actually the percentage of your account that you choose to risk if the market does not go in your position. And what do I mean? I have $100 account, and I decide to lose um $2. That is actually 2% of my account, and that percentage or that amount of money I've decided to lose or risk is actually the process of me applying risk management to my trading. So with a proper risk management of one of like 1%, it will mean that I would have to lose 100 trades before I exhaust my capital. Yes, for example, I lose $1 today, $1 tomorrow, $1, and all that. It will take 100 times before my capital gets exhausted. And most time often you don't see 100 losing streaks in a row, because there will be some point, even if you're guessing, you would still see some wins year in, year out. But applying proper risk management is one of the key factor for security to your trading capital. Um, we have two basic exit strategies we use when trading. Number one is a stop loss, and number two is a take profit. So the stop loss basically just tells the market that, market, when I'm in this, when I'm already accumulating this amount of loss, please stop me out of my trade. So I have $100 account. I always use that example, and I'm in a loss of $3 already, and my stop loss is $5. So once I'm down by $5, the market would automatically close me out of the trade by itself. Okay, that is my stop loss. And take profit is just the reverse. When I'm in so amount of profit, for example, I'm on a trade and I'm on $50 currently, but my take profit is at $70. Yes. So once the market reaches $70, it automatically closes me out of the trade and closes my position for me automatically. So these are the two exit strategies we have when trading. And PEEP, we're looking at PEEP. PEEP stands for percentage in points, and this is actually the basic unit measurement of movement in the forex market. For example, in time we have seconds as our basic unit measurement, right? And same thing for the forex market. The basic unit measurement of all movement in the forex market is pips, and we use it when calculating our take profit and our stop losses. For example, using I could tell the profit market that when I'm already down by 50 pips, please stop me out. So I'm using a stop loss of 50 pips. Then I could tell the market, even I'm in a take profit of 150 pips, please stop, please take my profit for me and close me out. So I'm using this measurement or this basic unit in determining my take profit and my stop loss. So pip is actually the fifth digit in any quote when counting from the left, and we would see an example right now. So we have 1.1538. So this is an example of a quote, and the fifth digit from the left is 8, which stands for 8 pips. Okay, so if I'm calculating the amount of pips I'm going to risk or lose, I'm just going to subtract the fifth number. Or although some currency pairs have different pip calculation, you should actually check that out. Different pips calculation, but most time the fifth digit in most currencies, the fifth digit is actually the pip value. Okay, for example, here 8 is the pip value. So if I have another currency, if I have the same, if I want to set a stop loss of 3 pips, I will just subtract 3 from 8. So I would use 1.15352. Yes, depending on if it's a bar. So that's just an example of when I'm selling and I'm putting the stop loss. Let me not just really confuse that. But if I want to set example a stop loss of 3, I'm going to subtract 3. Okay, if it's a sell trade, I'm going to add 3. If it's a buy trade, I'm going to subtract 3 to set my stop loss. Okay, just know that if it's a buy trade, I'm going to add 3. If it's a sell trade, I'm going to if it's a buy trade, I'm going to subtract 3. Yes, if it's a sell trade, I'm going to add 3 because my stop loss will be above for sells, my stop loss will be below for buys. Yes. So we've come to the end of this very simple basic lecture, and check out www.tradewithbolu.com to advance more of your knowledge about the forex market. Bye for now.